The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 4th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? Yeah, let's do that. And you know the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make this one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful, well, it's terrific Tuesday. It's also a wonderful Tuesday. Yeah, that's right. We won't be with you on Wonderful Wednesday, but let's make this terrific Tuesday wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading down 575 points. That's off a little over 2%. Trading out at 25,250. S&P is off 63, trading at 2727. NDX 100 down 178 points. Russell's off 50. Semis are down 47. Spot VIX index up 20% today. Yeah. The old one-day rate of change rule may apply, except the cash market is not open tomorrow. I believe the electronic market in the futures is, but, you know, I don't even know for sure on that. Maybe somebody in the den knows. Regardless, you've got gold up $6, silver up 10 cents, light sweet crude up 30 cents, natural gas up nearly 4%, 16 pennies. Leading the charge dollar-wise, the upside auto zone, it is in the zone, up 46 buckaroonies. That's 5.5%. Restoration hardware up 11 bucks or 8%. To the downside, Amazon, the big dollar loser, 3.5% or 63 bucks. Booking Holdings down 52. Google off 32. BlackRock down 26. So certainly things to look at. Of course, I want to look at what you want to look at. No questions yet. Yeah, no questions yet that I see from an email standpoint. So let's just start off by taking a look at, hey, what's going on, Steve-O? Oh, and now I see some questions are rolling in. Let's take a look at the Dow. If we take a look at what the Dow... Oh, I thought I deleted that. Thank goodness I didn't. If I delete a chart, then I've got to come back, rebuild things. It's, you know, I don't know why they put the X so close to where you minimize. It's a bummer out there. In any event, hey, we don't have to worry about that. I didn't make that mistake. So what have we seen here in the Dow? Now, what we're taking a look at, if you're watching us on TigerTV, by the way, the Dow is trading lower by 586 points. The average true range over the last 10 days is 425 points. That's right. These days are basically average. Now, today's just a tad more than the average out here, but this is the market that we are trading in. So let's take a look at just simple trend line analysis, because each of you can do this at home on your screens out here. And you'll see from the top, you'll see some red diagonal lines. From the bottom, you'll see the green diagonal lines. You will see that we are trading, or the Dow is trading, with inside of the Get Smart zone of silence, cone of silence out here. So when price on that nice move yesterday, I apologize that I couldn't be with you yesterday, as price moved up, it was moving right up into that trend line. And voila, that was resistance. Resistance held. If we take a look at the bottom, you'll see several different swing points where you can create a trend. So average, just slightly over average, maybe just trying to get in a little bit of tomorrow's action out here. So where is it that the Dow is headed to? Well, in order to, the Dow could easily head all the way back down to the bottom of its trend line. That'd be in the 24,350 level. It could be some type of retracement from low to high. Let's take a look at those areas because the retracements here tell us a lot when we go from low to high. What we can see right now is that today's action has taken out the 0.382 retracement level. This is as of 1:11 in the afternoon with a wide-ranging bar. What do wide-ranging bars tell you, tell me, tell us? Well, we know that markets don't end on a wide-ranging bar, or typically don't end on a wide-ranging bar. This, therefore, suggests to me that where the Dow at least wants to pull back to is the 0.618 retracement, and that's at the price level of 24,922. You and I were taking a look at the cash industry. Where does that take us to? Well, that takes us to where we saw price gap up on the trading day of November 28th out here. Of course, we can go look at the equity futures contracts because they fill in the blank for us. So now, if we go ahead and we put out the futures contract, you're going to see a similar set of trend lines out here. You're also going to see down at the 24,749 level is still the top of its daily profile. So if we look at retracements inside the equity futures contract, let's go from the low out here. That was established November 23rd to the high out here on December the 3rd. The 0.618 level is 24,949. The top of that box is just slightly above the 0.786 retracement. So the next target to the downside should be 24,949 in lieu of some other bottoming pattern that might come out. At this stage of the game, it's I won't even go there. I won't go there. I was going to mention something. I won't go there. Let's go take a look at the S&P 500. I know somebody's out there saying, no, go there. No, we're not going to go there. If we take a look at the S&P 500, now it did not make it up to the trend line. Why didn't it? Well, I don't know why it didn't. It just most certainly did. Now, on the cash indice, we'd be looking at the October 17th high, or I would be looking at it, the November 7th high, and that was really kind of like similar swing points. Price did not make it up there. Nonetheless, what we can do is let's go over and take a look at the ES Mini. The ES Mini, on the other hand, did make it up to its trend. Whoops, didn't mean to do that. I meant to do this. It did make it up to its trend line. It's one of the reasons why I suggest that really you don't need to trade the future, so to speak, but you do want to have access to the data, because without access to the data, you're gathering information with both hands tied behind your back. No good. Time out. If we take a look at the ES Mini, yeah, it did make its way all the way up to that trend line. Rejected it too. Now, there's a couple different trend lines on here. Let's just take a look at the one at the top. When I say the top, I'm referring to the high on October 17th, the high on November 7th, and then obviously yesterday's high out here. So price is now pulled back. It's back inside its box. And this says no reason that price can't make a run for the bottom of that consolidation area. Or at a minimum, I would say the price target inside the ES Mini, looking at the daily time frame, about 2672. And that's what's going on when we take a look at the Dow and the S&P 500. So we get back from this break, I'll go read emails. I'll take a look at requests inside the den. I'll do anything. You just have to get in touch with me. Steve Rhodes with TFNN. Right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we've got a couple of questions that we want to get to inside the Tiger's Den. The first one coming from Ruby. Ruby wanted to take a look at platinum. And Ruby, first, the best thing, well, first, platinum is trading out at 805.70 as we speak right now. Maybe the best piece of information I can provide to you is that it appears that on a daily time frame, we can see that today's bar is orange in color and suggests that we're going to see a new profile form. So at least that would provide you with some new levels of support or resistance. At this stage here, we don't have that when we take a look at the daily time frame. Without support out here on a daily time frame, we would have to then at least target the last swing point, which would either be the September 4th area, which price hasn't hit just yet, or the lows out here from August 16th. If I look at the weekly time frame, price is below, and it tested today the bottom of the weekly profile, which was 816.40. So that's bearish because old support is new reason. Well, maybe it wasn't today, maybe it was yesterday. It's a weekly chart, so my apology for saying that. But it was tested already this week, so old support, new resistance. There was a close, by the way, last week below that. You already know that, but this week there was a test of it. Tells you that it's solid. Resistance out there at 816.40. So I think that until tomorrow's information comes in, there's not much else that I can share with you. There is an A to B equals CD to the downside. Let's just put this chart out here. This is the Ninja Trader application. If we draw that A to B equals CD pattern, it looks like about, whoops, sorry about that. It looks like this. Okay, I'll try it one more time. There we go. It looks like this. Says that 791.95 would be the next target area. We don't have any kind of bullish reversal signal as we speak just yet. So everything is pointing to lower price. I say if you're not in a trade at this stage here, you know, wait for tomorrow. I guess in this case it'd have to be wait till Thursday. See if you've got some new information for you. So I hope that that helps you out. Peak D wanted to take a look at two symbols out here. One was Nestle. And if we take a look at Nestle, what is it that you're looking for here, Peak? Where are they headed? Where are the targets? So that's the question. So in the case of Nestle, here's what we know. We'll take a look at the weekly time frame. Remember, Geez, how do I do that? How did I do that? What's going on here? If we take a look at the weekly chart for Nestle, now what I don't know is, and maybe Peak, you could tell me, is whether or not, the gap, for example, again, I'm looking at the weekly chart, whether that gap, because here we could be looking at currency conversions. But I was going to say, before I interrupted myself, you like how I do that? I interrupted myself out here. Was that gaps are our friends, either the downside or the upside. Why? Because they provide us with tons of information out here. And price has gotten back to a gap on a weekly basis that began or was formed the week of February 5th. It's actually the low because that was a gap to the downside on January 29th. That was 85.07. Last week was a close above that. The volume there was 4.3 million shares, and that was taking out 2 million shares. So in essence, what the chart for Nestle is telling us is that there's an A to B equals C to the upside. This is a longer-term chart. This is when I say longer-term, it's a weekly time frame chart. And so the weekly A to B equals CD pattern says 89.96 or 92.95 to be the target out here. Now, volume last week, as it was moving higher, was 4.3 million shares. Even though we aren't into that swing point from back on June 26, that's probably where it's headed. That at 8.3 million shares out there, 8.9, I should say. So it looks to me like where Nestle is headed to is 87.02 to 89.40. And if it can clear that, then you've got that A to B equals CD in place there. So that's what I see when I take a look at ticker symbol NSRGY for Nestle's out there. You want to take a look at Hershey as well. Peak D has got a sweet tooth out there, but let's face it, who can argue with that? Certainly not me. I'm not going to, because he might have the number 1 sweet tooth. Well, I've got the number 2 sweet tooth out there. How sweet it is. If we take a look at what Hershey is doing out here, I'm just looking off screen, moving higher, doing less relative energy. Today here, oh, geez, come on, work with me here. So in the case of Hershey, just going to look at this here. So volume-wise, just for the heck of it, peak, this is trying to deal with November 16th as an example. 1.6 million shares. You're at about 900,000 shares. Looks like it's moving higher with the same, similar, or more volume. So that doesn't look too bad out here. But what we have to watch is, what is today's candle? Right now, it's like a doji, combination of a doji and a shooting star. And what I'd be watching is the figure of 108.46. It's not today. And really, what it really says is we have to watch, or it has to watch the figure of 107.45 out there, the top of its daily box. The reason is it's really kind of stretched. It's doing that on less energy out there. That can be a sign of a slight complication ahead for Hershey's out there. Let me look at the monthly time frame chart. Just really kind of consolidating out here. So 117.08-ish area, or really the number's 117.79, is going to perhaps be some stiff resistance out here. So I hope that helps you out with regard to what Stevie is seeing inside of ticker symbol HSY. I think we've probably done this before. Dark chocolate, super dark chocolate, or milk chocolate. I guess there's also white chocolate out there, although that never made sense to me. How can there be white chocolate? Well, it is. It's not Stevie's favorite, and I will pass if that's what you're going to send me, is some white chocolate. It just doesn't make sense. Okay, let's see. Was there some other questions? SR, can you look at MUX? That would be McEwen Mining. So the answer is we absolutely can. MUX is the ticker symbol out here, trading out at $1.85. No other information out here. Yeah, everybody likes chocolate. Jumbo shrimp. Let's not get started out here. No, let's actually get started. So in the case of McEwen Mining, this thing has been in a consolidation. It's hit the top of its consolidation, so to speak. We're looking at a daily time frame. The consolidation is 188 at the upside and 171 at the downside. Last time price inside McEwen Mining was up here was on the trading day of November 16th, about 3 million shares. Today you've done 1 million shares, so Mike K, it's moving higher, doing it with less energy out there, less volume, I should say, when we say energy. So just kind of consolidating between this area. If it could close above 188, then maybe what you would see is a run to the 198 level. But that's what I see when I take a look at McEwen Mining out here. If I look at the weekly time frame, several weeks ago, it's been testing the lows from December 2017. About 11 million shares out there. It was tested with 13 million the week of November 12th. Not good. 5 million on November 19th. That was okay. 7 million last week. And, well, this week only about 2.8, but it's just hanging out at the bottom. Looks like a bottom fish to me when we take a look at McEwen Mining. Maybe there's some better mining stocks out there than this one. And the reason is because what we haven't seen, or what you haven't seen, or what anybody hasn't seen, is a sign of strength off of the bottom, which is what you like to see, right? It's tested the swing point on a weekly basis, done it for the last several weeks, done it with light volume, but there ain't no sign of strength. And that would be step number 2 in Tom O'Brien's timing the trade. Wait for a sign of strength and then buy the first retracement. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Ruby says white chocolate is made with a blend of sugar, cocoa, butter, milk products, vanilla, and a fatty substance called lecithin. Is that how you say it? I think so. Technically, white chocolate is not chocolate. I knew it. I knew it, yet they market it as chocolate. And it doesn't really taste like one because it doesn't contain chocolate solids. So there you go with regard to chocolat. Okay, Dow's off 680 right now. So let's continue venturing on here, see where we're at. Oh, the question that came in, or a couple questions that came in. One was if I could take a look or discuss or just mention the inverted yield curve because everybody else is. So, that's not exactly how the question was framed. But I do have a chart here somewhere. But, look, everybody uses maybe different to look at the yield curve. What I have access to very easily is the 13-week T-bill. So we're looking basically at the 3-month yield, the 5-year, the 10-year, the 30-year. A lot of times people are looking at the 2 and 5. But here, this chart is just taking a look at, quite frankly, the 10-year yield divided by the 5. Now, you can look at the last column out here, and you can see what the current rates are as we speak. So we haven't exactly, at least taking a look at the 5-year and 10-year, seen an inversion out there. But the inversion would, in essence, or where they would be equal, would be along this bottom line here where it says, oh, wait a minute. Yeah, where it says 1, or the yellow line out there. They would be equal to each other. That's not exactly the case right now. But people, if we take a look at, when I say people, if we take this and we pull this back a little further, what we saw out here was the yield curve in these two instruments go below 1. Back here in January 2000, January 31st, 2000. The top panel, by the way, is the S&P 500. So, the mere fact that when you do get an inversion, that you can't use that. You can use it however you want to. But this went down below 1. This is a weekly chart, by the way. The week of January 24, 2000. The top itself in 2000, when did that really take place? I think it was around September in 2000 out here. If we come take a look at 2007 time frame, just to give you an example, it went down below 1 on February 20th, 2006. And, of course, the high out here didn't take place until, this is the S&P, till October 2007. So don't get your skirt in a tizzy out there. The boob tube guys, gals out there, they just do. They latch on to something like there's no tomorrow. And I promise you something, there will be a tomorrow. It's just really that simple out here. Hey, talk about a move. Take a look at Treasury bonds. Speaking of yields, Treasury bonds moving higher in all major currencies. In fact, you've got the Treasury bond here, the 30-year, in euros all the way back to the August 2008 highs out here. So they're making a 100% move of a move. Not exactly all the way back to August just yet. Well, I take that back. Trading into August, when we take a look at T-bonds in sterling, when we take a look at Treasury bonds in yen, if you're wondering, hey, why are yields moving lower and bonds moving higher out here, there is a rush. These traders see on their screens something that's moving higher. It's been that way with regard to the foreign markets out there. It is for me, from my standpoint, this guy, in these 2 years, is nothing more than traders of those currencies wanting out of Dodge. Yeah. It doesn't, kind of is logical, right? When you see the macaroons going on over in Paris, in France, out there, just some crazy. And I love macaroons, by the way. There's nothing like a good macaroon, especially one dipped in some chocolate out there. But if of course, you want euros or do you want U.S. dollars? And wanting U.S. dollars, in essence, is the same as wanting U.S. treasuries out there. So is there any wonder that all of the flow of capital is coming into the United States? It's coming here. It's not going into gold, so to speak. Yeah, gold is moving higher. It's at a new high in maybe the last 5-6 months, if we take a look at that inside of gold in pound sterling. It was at a new high yesterday inside of yen. Hadn't seen those highs since July of this summer out here. Inside of Euro land, it's back to the June of this summer level out here. And inside of U.S. dollars, so those currencies basically moving higher. They're just saying, I don't want to hold on to assets, and I want to get it, into these U.S. equivalent type products out here. And if we take a look at gold right now, just like Mike and I, we were looking at McEwen Mining. Mike, I think there was another instrument you wanted me to look at, and somehow I didn't get to it. I'll have to remind me what that is. If you can type it in, that way I don't have to try to go through the TigerTV stuff and try to find it. If there wasn't, then my apology. But there we looked at a range, and certainly inside of gold, inside U.S. dollars, range bound, continues to struggle to get over where the sellers are located in U.S. dollars. And those sellers are like, they're sitting there saying, yep, hey, it's just like trading places out there, okay? It's just that on one side of the screen, you've got folks that are buying gold in euros. And if you're wondering who is selling to them, it's the gold traders in dollars. Because gold traders in dollars are like, hey, our back is right up against the wall here of resistance. The weekly top of the box, the daily top of the box out there. And so they're just doing the old Dan Aykroyd, Eddie Murphy situation, buy, 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 buy. Yeah, that's what's going on. We can see it happen right in front of our eyes out here. Anyways, so that's it. It was SJT. Well, thank you. Was the ticker symbol, the other ticker symbol that Mike wanted us to take a look at. SK. Was it SJT? SJT. That is the San Juan Basin out here. Mike, doesn't look good to me. What are you seeing? Here's what Steve-O's seeing. We take a look at the San Juan Basin. We're seeing a swing point out here, the swing point on a daily basis that it is trading into. Let's do a thorough job out here. That's the trading day of September 19th, 773,000 shares. And yesterday was pushing down with about 400,000 shares. So lighter volume. Today you have a little bit more volume. So it looks like it's maybe picking up steam, even though it's rejected that level. Doesn't look like it's going to have the volume of 773,000 shares out here. But are you looking to buy it because it's a test of a prior swing point on lighter volume? Is that the kind of the thought behind it? I wouldn't do it. I don't know. Is San Juan Basin, is this a gold stock? I don't know if it is or it isn't. I'm not familiar with San Juan Basin. Mike, what is it? What is it? It's a natural gas. Okay, so this is a natural gas stock, natural gas pipeline stock. With natural gas having taken off like it has, and this thing is testing the lows, really? Now, I don't know what the sector looks like. So does the entire sector look like this too? And therefore, it's got absolutely nothing to do with the fact that natural gas's performance out here. In any event, let's just do this. Let's just say this out here with regard to San Juan Basin, and that is wait for a sign of strength. I think that's the best advice. Or be careful. And make sure you have a close below the low, the trading day of September 19th. Steve Rhodes with TFNN.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So question coming in here from Nick. Nick wants to take a look at a short-term chart. He's asking to look at the 15-minute Dow chart. What I would prefer to do, Nick, is just look at the 15-minute Dow equity futures contract out here. And his question is, where would you enter to go short? And and I don't, if I'm going to provide you with a spot, let me see here, which I will. I would have to wait for price to bounce up and test Stevie's red line. Right now, on a 15-minute basis, you're looking at 25,325. That is going to change. Let me see where this thing. Whoops, wrong thing. Just doing this on the fly out here. Let me see on a 15-minute basis where we're at. We're in that fourth wave out there. Hey, speaking of waves, Basil's got a workshop tonight, and I would really recommend that that's what you do with your Tuesday evening out there. I think that's a workshop that's absolutely worth attending. So I know all the details are on the homepage of TFNN.com, and I know he would have something to say about when you get into at least that fourth wave out there. So, Nick, what I can say is using the combination of tools out here, I would at least wait to see if there's a bounce into Stevie's red line at 25,329 as we speak right now. Now, the reason I say that or provide you with that is I was really looking for some market profiles out here to see if anything had formed, and nothing has. So you're kind of in nowhere land. And so, therefore, on a 15-minute basis, I wouldn't recommend a price as we speak right now. Now, the volume is pretty good inside the markets. What I mean by that is if we just simply come take a look at the SPY right now. So it's 144. So we've traded for basically 4 hours. And if we take today's volume, about 83 million shares, and we divide that by 4, multiply times 6.5, we're going to get into the 130 million range out there. Now, not that November 28th was a swing point, because it wasn't, but that's where the SPYs moved to the upside with 127 million shares. Now, what the SPY has done, if you and I were not paying attention to the equity futures contract, we would say the SPY is pulled back to support. Support being the 270.75 level. That's the bottom of its daily profile out here. That's the left-hand panel of my screen. So just out of curiosity for Nick out there, if we look at the Dow Diamonds, they are nowhere near a market profile for the ETF structure. Volume-wise here, You've got 2.8 million shares. So divided by 4, we'd be at what, about 700,000? 7 times 6 would be 7 times 6.5 would be what, to say 4 million shares or so. So you got volume picking up. There was, well, no, it's light. So volume in the Dow Diamonds is actually light, because on the trading day of November 28th, you did volume of 5 million shares. Did I do my math right? Let me see here. Let me see here. We've got, what did I say? We've got 2.8 divided by 4 times 6.5. It seems, oh man, Steve-O equals 2.8 divided by, like you guys want to hear me talk about a simple math formula. That can't be right either. Oh, I know what I did. Yeah, so 4.5. I should just go with my calculator in my brain. So that's coming in a little bit light. And so, you know, Nick, that would say sit tight. Just sit tight out there. So thanks for writing in. Hope that helps you out. No other questions that I see. So where else should we go? What should we really look at that can be of help to you or anyone out here? I don't know. Let's take a look at some of these stocks that are moving to the downside. Let's look at Apple, down $7.50 right now. Let's try to figure out what Apple is doing. Let's turn on the volume. So on an average daily range out here is about $6 of movement inside of Apple. Let's see, what's the actual price movement so far today inside of Apple? It is $7.49. So kind of average. Volume today in Apple is about 23 million shares so far. When this was moving up, it was 46 million shares on November 28th, which is in essence its little breakaway off of the bottom, a sign of strength. So Apple's pulling back with some light volume out here. Take a look at what else? Amazon, we know AMZN is pulling back. The average true range on this is $71 so far today. This is down about 85. Volume today about 4.9 million shares. Goes back to November 28th. That was about 8 million shares. So again, lightish type volume out here inside of Amazon. Doesn't mean that it's not going to head lower, but if things are really going to take off to the downside, not that they haven't, because we're down about 2 3/4% inside the Dow to the downside, it's going to need to get some real juice inside of it. The VIX, spot VIX index is up 30% as we speak right now. Ordinarily, what I would do, and I don't have the data to support this, is we'd come here, we would look at this chart, and we would say, you know, be careful, because tomorrow what you would expect or anticipate overnight, if you get a one-day rate of change above 10%, right now it's at 29.68, you take a look at those blue arrows and you'd say, hey, there's a fairly decent chance of a bounce or bottom. I am not saying that today. Tomorrow, the market being closed with the equity futures trading until 9:30 tomorrow morning. So we're just going to have to say that is off out here. If I take a look at the New York Stock Exchange, I know there was some mention about the advanced decline issues out there. If we take a look at that just for the heck of it, the net advancing issues is minus 1940. So you have 500 advancing, 2,400 declining. So about a 5-to-1 type ratio out here. That advanced decline data as we speak thus far takes that advanced decline oscillator reading is still above 0, but that spot volatility index being above is 50-day. Only spent 2 days below that level at 1853 out there. We're just in a consolidating market out here, and it's going to be good for clearly it's good for the bulls for a few days and good for the bears for a few days out there. What else can I just rattle, shake, rattle, and roll to provide to you that would be of assistance? Is there anything? Is there anything? Is there anything? Yeah, as I just look around my screen, it's really not much more than the stuff that we have really covered out here. God, look at that movement in the Treasury note. Up 2 full points today. The Russell 2000. So the Russell 2000 is getting the schnot kicked out of it. There's no doubt about that. So the Russell 2000, thank you. I did not, so thanks for bringing that up. If we take a look at the Russell 2000, This clearly is the, and we're looking at the equity futures contract right now. This clearly is making a run for its trend line out here. At least that's what it looks like to me, Jayster. And that's just simply just taking a simple trend line from the low of October 26th to the November 20th level. So you're at 1493. That low is in about the 1460, 1470-ish area out here. That's what it looks like to me. If I look at, if I look at the daily chart out here for the Russell, kind of odd, right? But if I look at it, if it's going to find support, it's kind of like the right here and now. And the reason we say that is because it's testing Stevie's red line. We're at 1493. We're looking at the future contract for the Russell. About 1495 is the support level out here. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Now it's off 720, S&P down 76. So let's take a look at some things that you can be watching as we come into today's close. So the question about the S&P 500. So far, the pullback. I think we looked at the SPYs. It said volume. We looked at the ETF structures and said volume looked a little bit light. Here's what we've done so far in the S&P 500. We've pulled back to Stevie's red line. It's a level that should hold us support if the bulls are going to have any upper hand or any hand whatsoever. That's 2703.26, as you can see right now on my screen. You close below that, Says you can go all the way back down and retest the lows from back in the end of November out here. 2703.35. Get rid of the change. 2703 is the number to be watching in the S&P 500. So far today has been a test of support. If we take a look at the Dow Jones, Stevie's red line, that number is going to be 25,087. So far, that price is held. If price closes below that, it says there's lower price coming at us, or at least should. If we take a look at the NDX 100, the NDX 100 has not made its way down to Stevie's red line. 67.58 is the number, so no test there to speak of. We take a look at the New York Stock Exchange. The New York Stock Exchange, a test so far of what? Stevie's red line. The number to be watching there, 12,259 is the price level out there. If we take a look at, what do we want to look at next out here? The Russell 2000, well, we looked at the equity futures contract, the actual cash indice. You can see it's pretty much sitting right on it. So figure it's around 1497 is the number that you would want to be watching there. The Wilshire 5000, a test of Stevie's red line. What's that number? 27,848, pulling back to what should be support. Doesn't mean it will be, but what should be support. So be watching that. Another reason why, I forget who was writing and asking about where do you go short the Dow out here. You definitely don't do it as it's coming into, on a daily chart, what could be potential support out there. So that's what Stevie sees, other than, hey, we'll be back with you on Thursday. So have a terrific Tuesday. Stay tuned. Got your favorite polar bear. He's coming up next. And don't forget, 5 to 6 p.m., an extraordinary workshop by Basil Chapman. Have a great Tuesday, folks. We'll see you on Thursday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.